Hey everyone. Happy very hot weather token 2049. I gotta tell you, it's a lot better than last year when it was flooded. So, big improvement. So first off, this is a panel about institutional stablecoin adoption. And I gotta say, as someone who's gone to crypto conferences since 2013 or 14, I think I've heard about this exact panel for nearly a decade. Probably 2016 or 2017 was like the first time I'd ever seen something like this. So, I think the icebreaker I want everyone to kind of warm up with is, at what year do you think that we will not have to have a panel about institutional stablecoin adoption and it'll be done, we'll be finished? Because it's kind of ridiculous if you think about having the same panel every year for a decade at conferences, right? So just maybe introduce yourself and also answer what year you think will be done with this type of panel.
Hey guys, my name is Forte. I'm the founder and CEO of Elixir. I don't see a hard year. Let's hope it's this year that it stops. But I think everyone agrees that stablecoins are kind of one of the big successful use cases of crypto. So unfortunately, I think these panels are going to keep happening for the time being.
But you gotta give me a year. You gotta give what year?
All right, 2030.
Okay, good. So before token 2049 has to change their name. All right.
Hi guys. My name is Xuling. I'm head of marketing of Unipay. To answer your question, when do we no longer need to do a panel about stablecoin? I actually don't have a specific time in mind, but I think probably when everybody stops talking about stablecoin, when it become a norm of our life, that's probably when we don't need those panels anymore.
Not a year? You gotta give a year. You gotta give a year. That's
let's say before 2049.
Okay.
Probably within the next 10 years.
Cop-out answer.
Hopefully,
all right.
inshallah.
I'll take it.
Hi everyone, my name is Kai-tai. I'm one of the co-founder of a Bitcoin-backed protocol called Yala. Echoing what has been said before, so on the year, just +1, 2050.
Okay.
Yeah, hello everyone. My name is Piyush. I'm head of ecosystem at BIMA. I don't think so there will be a year. You have to run this panel for next 20 decades.
20 decades?
Yeah.
200 years?
200 years.
I mean, the USD has been very unstable on 200-year time frames, so I'm not sure you want to talk about stablecoins on 200-year time frame. But all right, well, let's actually take, given that we have 30 minutes, and I don't want to kind of, I want to dive into other things, but I want to give each of you 30 seconds to describe what you're working on, how it's related to institutional stablecoin adoption, also maybe how it's related to non-institutional. Everyone has a degen marketing strategy somewhere in their playbook. So I will be aggressive on timing you, so you each get 30 seconds starting now.
All right. So hey guys. So Elixir is a modular network that we have over 10,000 validators come to consensus once a second, post fraud proofs to Ethereum. This network powers DEUSD, which is our stablecoin. We have about 200 million in TVL. And we view it as the gateway for these institutional assets to actually enter into DeFi. So we have partnerships with Securitize, big announcements coming out, obviously, with Token 2049 with Apollo and a bunch of other large leading issuers, allowing for these holders of these RWAs to one-click mint dollars and bring it into DeFi.
Good.
All right, so Unipay is a stablecoin yield-bearing protocol with real-world payment solutions. And we also have our own stablecoin called USDU. So by leveraging delta-neutral strategy and our liquidity mechanisms, USDU actually enhances the stablecoin issuance efficiency and also liquidity provision and yield farming.
Great.
We are building Yala. So our users are BTC holders. We want to help those users to connect to sources of yield. It could be on-chain with DeFi or RWAs with off-chain. I mentioned before on TVL's private credits. Our motto is really getting the decentralization first. So that means everything would be trustless or trust minimized. And we help users to expose their BTC without selling them or moving their assets outside of their wallet.
So we are building BIMA, which is a Bitcoin-backed stablecoin. We can literally use any BTC asset as a collateral, of course, after vetting. So it's kind of like we kind of have Morpho, taken as an inspiration for different pools, then kind of have like liquidity-based stability pool. And we even forked Morpho for lending borrowing in general, just because they charge a lot. We want to enable it in-house. Of course, we work with them. So in general, our core focus is to work towards real yield. So we're working on many structured products, be it, working in all the strategies and all that stuff. Yeah.
All right, good. Awesome. So, I think one of the reasons people are talking about stablecoins a lot, beyond the fact that, stablecoins recovered their market cap post the 2022 lows, 2023 lows, is that there's been a lot of new centralized players who've kind of expressed interest, whether that's via acquisition in the case of Stripe, whether that's via adding exchange functionality in their apps like the Revolut's, Lemon Pay, etc. around the world. And so there's been this kind of fintech first move into stablecoins. I think obviously the banks and others will be kind of like the laggards, second movers. How do you think this plays out? And sort of how do you think that the fintech type of users are the types of users who are needed to get institutional adoption, or do you think they'll, will kind of grow in users in a totally different way? And what do you think the challenges that these kind of incumbents coming into stablecoin land will face, and how do startups sort of fill those gaps?
All right, I'll start. So I think the stablecoin landscape is going to bifurcate pretty aggressively into two different camps. There's the regulated, regulatory friendly stablecoins that went through, actually got the licenses and did all of that. And then there's going to be the decentralized stablecoins, which if you guys have seen the Genius spill, pretty much you have to put yourself into one of the two buckets. And you either go and you get a state charter and you become you have to only hold treasury bills, and that's your game plan, or you're more degen, and that's kind of the route that Elixir has taken, obviously, right? And so where you have higher yields, it's a yield-bearing stablecoin, and those are the two kind of camps. We've seen a lot of the big players move in, but they've all been in that regulated camp. So it's super hard to compete, and the winner for that is just going to be whoever distributes the best. So if you're PayPal, right, and you have PayPal, you're going to get a lot of adoption through the users of PayPal for PYUSD. Same thing with Robinhood. I think Robinhood will probably eventually launch a stablecoin as an example. They're just going to win based on the distribution of the users that they already have. For everyone else, it's just going to be, it's going to compete. They're all competing based on yields, based on safety, based on transparency. So that's how I view the future is going to look with these big incumbents coming in. If I was launching a very base, bare bones treasury-backed stablecoin, it's very, very competitive because you're competing against BitGo and all these big players. So yeah, that's my thoughts on it.
Yeah, my opinion is that it's definitely great that those Web2 companies are adopting stablecoin these days. But I also think that a lot of these companies, they are not really making use of stablecoin. They use as a tool. For example, once they have USDT, they immediately deposit into USD. But I think there's a lot more that we could do with the stablecoin that they own. So if I was starting startup, I would definitely develop certain DeFi protocols to help them how to generate yield with the stablecoin that they own, and also they help them with cross-border settlements, and also into the real-world payment solutions as well. So yeah.
I believe there's too many stablecoins currently, and that creates liquidity fragmentation. For our user, when they wanted to use a stablecoin as a tool to move liquidity from point A to point B, then there's one KPI they're looking for. It's the depth of the liquidity. So to answer the question about who is going to win, or is it an institutional stablecoin that will take over the degen type of stablecoin, I think it's really around how the integration and penetration rates of those tools could be among the different DeFi protocols. To date, ETH has been one of the largest on DeFi. Then we have Solana coming in. And as a user from our platform, they have listened to the market and they wanted to look for potential yields with that liquidity. For us, the stablecoin that we win will be those who have at least 200 to 300 mil on liquidity. Very smooth experience with lower slippage, lower than 1% slippage. And of course, APY should be above the T-bills, which is around 4.1%.
Yeah, I mean, I believe institutions initially will win because they have a huge liquidity in general. When it comes to retail adoption, it will happen, but eventually, I guess, I think institutions have huge BTC assets in general because we are building stable around BTC. So they are also betting on many different kind of BTC collaterals. Of course, RWA plays a very big role here, where even like we have seen in Web2 specifically, a huge market is there for, hash rate or mining power, and they're generating RWA from it. And it's already in billions of dollar business. That's not coming on chain yet, but there are many people building that on chain. So I guess through that, more institution will get onboarded. And eventually, I guess retail liquidity is also coming in. In general, it's already there in stable market. But yeah, even for us, we are focused on both the sides.
Okay, now I'm going to ask another time-based question, maybe somewhat spicier, which is, right now, Ethereum is the king of stablecoin issuance in terms of just net volume. A, do you think another chain will beat Ethereum? If so, B, what chain? And C, what year will it beat Ethereum in stablecoin issuance? Given that we have some Bitcoin-backed stablecoins here, if all of you say no, someone is lying.
I can start. So I think in general on Ethereum, we have a huge BTC-Pi ecosystem as well. So, okay, a lot of LSTs, LRDs are building on Ethereum as well. So we, let's say, can be on Ethereum, of course. We are already live on Alpha Mainnet, by the way. So we can enable on Ethereum and bring in more BTC-Pi ecosystem here. So I think in general, I think every chain is kind of, moving towards being a BTC chain where they want more and more BTC liquidity. Now, which chain? I don't know which chain specifically, but I believe Core is doing a great job, in my belief, because they have many stuff in line. They have Core strategy, which is going great. They are coming up in, being miner space as well. They have LST BTC, which is kind of dual stake, what they are saying, which is good. But yeah, I think which year, they are already good now. They even got recently Sharia compliant. So I believe in the Arab world, they will be able to grab a good amount of liquidity. So yeah, I think in 3 years.
Wait. Chain, yes, no, chain, year. 3 things.
Okay. Core, maybe in a matter of 3 years.
Okay, so you think in 2028, Bitcoin Core will have more stablecoin issuance than all Ethereum. All right, written down. Next.
I'll go straight to the answers. I believe Solana, by 2025, 2028. And
everyone is really bullish on this 3-year pivot.
No, so if you look at the landscape, you need TVL, but TVL is not a thing. In DeFi, velocity matters a lot. So you want people to be degen enough to be in and out, and you want to be conservative enough to stake those liquidity. So if you look at the whole landscape, I do believe that Solana is a winner.
Yeah, well, my answer, yes, Solana, and before 2030. We're built on Solana, so we're definitely very bullish on it.
All right.
And then definitely no. I don't think in the next 5-10 years, no one's just beating Ethereum. And the reason, I talk to these issuers, they just want to deploy their funds where the DeFi ecosystem is, and they're not going to rebuild and redeploy their RWA and Rust. It's just not, none of these issuers have mentioned Solana once, in my opinion. So, no.
All right, so we got three yeses. One that's Bitcoin Core, which currently has a total of 0. I don't know how much. I actually have no clue about.
They have around $1 billion in TVL. I believe it's going to be good. But I mean, even Solana, I'm not saying no to Solana. Of course, we will be jumping everywhere.
I think I saw Mert somewhere, so maybe you're intimidated by his presence somewhere in this room. But all right, so everyone seems bullish on ETH, minus Philip on ETH kind of not winning. But another thing that as someone who's been on institutional stablecoin panels as a viewer or moderator for, like I said, like something like a decade, it's always been disappointing when you think about decentralized stablecoins, right? There was always the dream of debt-based stablecoins like Maker being able to scale. There was always the dream of, the far out dream of the RAI type of things. But in general, decentralized stablecoins haven't totally made it. We've kind of ended up in this world of like fully permissioned or sort of these yield coins that are like kind of pseudo permissioned. So do you think decentralized stablecoins have a chance of coming back? And I think the reason I ask this more pointedly is in Bitcoin and Solana, there's basically not zero, but like very low decentralized stablecoin usage. Whereas in Ethereum, Maker is almost like a financing vehicle for every other stablecoin, and that's the best use case of decentralized stablecoin right now. So do you think that will expand on other networks? Do you think there's another home for decentralized stablecoins, or do you think Ethereum has won that battle and there's no one else? Maybe given your...
I think I would be curious to, like, how do you define successful? And to turn it back on you, because it's like Maker now has 6 billion in TVL or 5. I don't know, whatever.
So as a stablecoin issuer on Ethereum, what percentage of your float is in USDS/DAI?
Well, we talked about this right before this. That's right. Like the majority of our backing is earning USDS yield, right? And I think, isn't that like a good use case? Isn't that like a winning use case for Maker at least?
So sure, it's like trade finance. It's like invoice factoring, but for other dollar-like things. I'm just saying that, Maker had to like fight through the trenches for years to get to this point of this, right? Like in Solana and Bitcoin, do you think that's even possible? Or do you think that decentralized stablecoins are always going to only stay in Ethereum? I guess that's...
Yeah, I mean, I think just in general, like, okay, for example, Go has been great for Aave. Like they rolled that out really well. Go is like, I mean, they've had hard problems like keeping the peg because a lot of people will just borrow and Go, sell it for USDT, and then do whatever they're going to do anyways. But it's a great revenue driver for Aave. And I think that's like, a lot of these lend borrows are issuing stable coins, and it's like pretty interesting to see that use case. The main thing that is going to be very difficult for like on Solana, on Bitcoin, is like you have to bootstrap the whole DeFi ecosystem before you can even get, like, you can't even get like Morpho looping or whatever, like a lot of the degen stuff that happens on Ethereum, you can't really do it on Solana because there's like very limited like idle USDC or things like dollars that are in the ecosystem just there looking for yield. So I think, I think it is going to be pretty difficult for stablecoins on other chains that are not Ethereum. I think, when things get really shit in terms of like the crypto yields, like people flee to USDS because it's generally the best. It's just treasuries plus MakerDAO yield. So it's like just effectively a treasury vehicle. But I think it's going to be pretty difficult for people not on Ethereum.
All right. And now the everyone who believes Ethereum will not be the dominant stablecoin issuing platform.
I mean, I agree to a certain extent what you say, but I definitely think that these days there are so many projects and DeFi protocols like building on Solana, like us. And I think Solana also realized that native stablecoin is also very important in the next coming up couple of years. And I think they're also like supporting it on top of that, and also like some PayFi protocols as well. Like I personally believe that it is definitely possible. Probably takes a bit more time.
We've been facing a pain point when we were chatting for a partnership with those decentralized stablecoin. I think the one common aspect is there are a DAO behind it. So when it comes to execution, it's pretty slow. So it is a so-called temperature check. You have to submit to a vote to the community before you can make a decision. If you do the comparison with other centralized stablecoin, such as Circle or USDT, you have a person that can answer your questions, that can design an action plan for the next 3 months. And once you hit mainnet, you have everything to go. Maker, Go, or the other stable coins want you to be on mainnet first. Then you submit a temperature check, and 3 months later, you potentially got something that could be implemented on a testnet. So as a result, I think it's pretty hard for decentralized stablecoin in the current state to be adopted and push it for innovation.
I think when it comes to usage perspective, I don't think so. I mean, Ethereum will be the king, no doubt, on usage perspective. It can be minted on anywhere, but even on Solana case, I believe, okay, it can mint there, but people have to come and, bring it their liquidity because it's too much fragmentation then at one place, and that can be Ethereum. I don't think so there will be any other, in my opinion.
Okay. All right, so it sounds like Ethereum is going to be the clearinghouse of decentralized stablecoins, if I succinctly summarize, because it's just hard to have the kind of immaculate conception that Maker got lucky with. Shifting gears a little bit, all of you are in the business of procuring yield for your users. But one kind of interesting thing is that stablecoins went from sort of very safe, simple, easy to understand yield of treasuries or staking rates to certain effective trading strategies, more complicated forms of yield, RWAs where there's sort of off-chain risk. And in some ways, stablecoins should probably be considered these types of stablecoins are more like yield coins, where they are sort of stable, but you're not totally sure with the yield. So, adding this yield adds some risk, obviously. And so in your opinion, how do you think about with your products what the correct level of risk is to add yield-wise? How do you determine the portfolio construction? How do you think about what components you want in of yield? And how do you decide when to evict a yield source? Because I actually think it's very easy to add a yield source, right? Number goes up, you're like, okay, got to add it. But when do you decide when to get rid of it? How do you kick them out?
Okay, yeah, I can start. So I think the number one priority is obviously safety. I think this is something that this is kind of just a very clear analogy. Even outside of stablecoins, you look towards 2008 with mortgage-backed securities. People will just eventually just start undercutting themselves with trying to land as much dollars as possible, right? And then the equivalent here would be just increasing the risk to try to increase the returns to get as much dollars in. And I mean, I actually think that there's been very limited adoption thus far of some of these stablecoins. There's a few of these kind of market neutral stablecoin, yield coins, like you were saying, where they just on the back end they're just a full hedge fund. And I don't know if you've seen some of these, not to name any specific names, but they'll pretty much just take the backing and they'll just be we're going to earn 20 to 30% APR. And they just pretty much treat the backing like a hedge fund, and they just run all these crazy strategies and stuff, and no one even knows, but you can see the backing. And those have had actually pretty limited adoption because people don't even know what's they don't know the risk, they don't know how to size it up. There is a very clear diminishing returns from trying to chase yield at all costs. And I think that's why guys like Athena have really sticky TVL. It's because people mostly understand what goes into it, and they understand, they can see the backing. Same thing with us, right? You don't want to just start aping the backing into different things, because then people you lose all that trust, which is the most important thing if you're a stablecoin. So I think it is a very clear, for us, we came out, we said this is our backing and we haven't changed it, and that will always be the case. Our backing's fully on chain. That I think is a prerequisite for us. You can't just start aping the backing into a bunch of random fixed income deals off chain, because then you lose all of that trust. So
Yeah, funny, earlier you mentioned RWA. I mean, these days a lot of people have faith in RWA, but my opinion, I do feel sometimes even RWA has a lot of risks, because sometimes it could be a real estate downturns, and also commercial paper issues, failures and stuff like that. I think sometimes with DeFi protocols, it's important to have full sovereignty and also transparency. So with Unipay, we use a delta neutral strategy to hedge ALP. In that sense, we earn stable yields, sustainable yields. And then on top of that, like we have our real world payment solution, so people can actually stake in our pool. And then like later on, the credit that they have, they could repay with the yield that they generate. So you can actually do with pay now, buy now, pay later. So I think with this kind of sustainability, like instead of just chasing for high and impossible yield, we're also like making it sustainable and trustworthy for people.
We think there's 2 points. The first one is what is the real yield, and second is how scalable are those yields. Real yield, if you see the composition of the different APY, some people are full by 8-10%, even more. But if you look at the underlying real APY, sort of are, small chunks are real from DeFi protocols, from strategy as data neutral strategy. And a big chunk is actually compensated by tokens. So usually on paper, it's looking very good. When you receive those tokens that are unlocked and vested, then the time you sell it, you never achieve the so-called 2-digit APY. Second point on scalability, pools are limited into the depth. So I encourage every user to see what are the single-sided depths of every LP, so that you make sure the way you come in and then the time you come out, you still got the same amount of the initial assets plus potential yields. Otherwise, it's pretty hard for those users to get those additional value outside their own assets.
I think in our case, what we are focusing on is how user want to approach their yield. So basically, we are giving them choice, a kind of a yuan finance module. You can assume that, okay, delta neutral strategy, of course, popularized by Athena, will be there. But any kind of strategy which an end user would love to, even a meme coin strategy, let's say, if someone wants to, of course, taking mind the risk appetite of end user, they can choose and do this stuff. Even we are working on real world utility. So let's say using our stable for securing networks of restaking protocols like Symbiotic, where they can generate a fixed yield. So I think all kind of structure products which will be available in the market, we will make it enable and give choices to end user.
Never thought I'd hear someone on stage shilling Falcon accidentally via the meme coin stablecoin, but here we are. All right, we have 2 minutes left. I'm going to end with one final question. 50% of this stage said Solana would have more stablecoin market cap than Ethereum by 2028, 3 years. So maybe, I guess like, I actually don't think I even know that much about the Solana stablecoin ecosystem beyond, I guess, USDC, USDT, and yeah, PYUSD. So where has the growth been coming from? Maybe, I think, some feeling since you've kind of...
Let's start with that. We are bridging part of those liquidities. So if you look at the trillion market cap assets from Bitcoin, part would be bridged to ecosystems that can achieve more than 5-6% APY. Because of the trading volumes that Solana ecosystem have achieved so far, those pools are getting at least 7% for users. So when it comes to a user who wants to know where to bridge, where to stake to get yields, I think the KPI would be the APY for those pools. So Solana ecosystem is mature and big enough to have different type of strategy to be applicable. So that's why we do think the majority of our liquidity from the Yala side will be sent towards Solana.
Okay. Actually, one final very quick question. You have to put 90% of your net worth into one stablecoin locked up for 5 years. You can't choose your own. What stablecoin do you use?
Ooh, and I think you have to put it in like a yield-bearing stablecoin, or just any stablecoin?
Any. You can be a gold bug.
Oh, I'd probably just put it in the USDC. I guess, is that banned too? Or like, all right, this is probably the safest, so I'd probably just do that.
Mine would definitely be USDU from Unipay.
I'll take USDC as well. Yeah, as a French citizen, I got my USDT locked to be forced convert to USDC because of Mika. So I do think that USDC is the most compliant and safest.
Yeah, I believe so as well. Like USDT is most compliant, so I believe I will do personally there.
Wow, no one loves Tether here. Sad. All right. Well, thanks everyone. Hopefully you got another year of an institutional stablecoin panel. Hopefully these end sometime soon, but apparently no one on this panel believes that's true, so we'll find out.